Okay. This chart, of course, we know this. What happened here. It pushed up and all that. Everybody knows this stuff. Hitting the 50. Basically, this is what I was expecting yesterday. I don't know if anybody read my notes from yesterday. Expect I was expecting a 3% move, and we have a 3% move right here. And anything above 41, let's say about 41.20, 41.25 area, this will be an overshoot. This will be an overkill. Maybe logical overkill. I don't know. Maybe because why would it clear the 50 on the weekly and move to the upside? Simply because tomorrow's expectation might be coming in saying that Fed is going to go 50, and then perhaps somebody comes and says, somebody might say think that Fed would go in 25, like Mo is mentioning there. So yeah, those are the expectations based on which it would be moving, right? So if that happens, then very likely this will clear here. Right now, it is hitting the second standard deviation on the week and stopping there. This is the expectation. This is the if you've read my notes yesterday, this is what was expected. Now after this, anything is an overshoot all the way up to 42.57. This is what I'm expecting to get tested tomorrow, about another 150 push to the upside, perhaps about another 3%, or rather 2 to 2.5% kind of a day. An overshoot perhaps would be 3, but this is where it is going. This is where the story is going. Let's look at monthly chart. This wouldn't make sense because this is just starting out, right? So let's look at SPX on the month. And right now it would be opening up somewhere about here, 41.20, within this range. So this is the monthly chart, and the expectation from SPX is to clear above 41.24. This should act as pretty decent resistance. Clear above there, push all the way into 42.38. Perhaps this line will be a little higher after today's price action, perhaps 42.50. This is where the whole story is going, and probably this will bring about in tomorrow's session or during the OPEC session. I don't know. This tomorrow we still have a FOMC to. In fact, today we have the session to deal with. I don't think it's going to end up around 42.50 today. Very likely another test of 41.50, perhaps an overshoot into 41.70. 41.70, 41.80 area. Perhaps if we go by the 5% day, right now it's a 3%. Was pretty much given, right? 3% was pretty much given, and that's how I was positioned within the to capture that 3% move. And 5% would be like last time we had a 5% rally. I think last CPI. If that thing comes about 5%, then we are looking at, and then there are bright chances of that happening. So we are looking at probably 41.70, 41.80 range if 41.24 clears. And perhaps if that happens, let's say we end up somewhere above 41.50 tomorrow, expecting it to hit 42.50 after FOMC or around FOMC. And then probably around the year end or the month end Santa rally, I'm expecting this to push all the way up here into 43.50. This is the scenario which I am expecting to play out right now. There are bright chances it will play out that way. The SMI is crossing to the upside. That's how it's going to play out. These are just cycles, right? Large cycles, and this hasn't MACD hasn't pushed to the downside further, but looks like it's not going to come down anymore. Couple of reasons for that. First thing, CPI coming in lighter than expected. Of course, this is the second report that where the CPI had come in, better than expected or lighter than expected. Now going forward, I'm expecting this trend to continue, barring two situations. China reopen doesn't go smooth. That's one situation. Second situation is something crazy comes out of Russia and Ukraine war. So barring those two situations, I think the market bottom is in, and it would be range bound again. Probably market will come back and test about 3600 again at some point during I don't know, first quarter of next year, probably March or something like that. But still, next year I'm not looking to make. I don't believe the markets will make another new bottom. 3,500 should be the bottom, going by what is happening with CPI and interest rates. And yeah, there are caveats, there are unknowns. China reopen play, that is still seem like, that is still that needs to play out smooth. If any bumps in there, then it's going to be trouble. So as of now, everything looks good. That's why we see big cratering here. uh, the chart today, technicals are oversold, so it's anybody's guess. It'll come down right here, 4102, and then perhaps push into 4080 and then bounce again. So I'm thinking more upside, right? I'm thinking more upside, even if it stalls somewhere around here because of the overbought conditions on the 1 hour chart. I'm still thinking upside following follow through, going forward. And this chart by itself, of course, it is moving higher, and we know where everything stands on, basically with this chart. But this chart is okay to look at. But where you will find more stability or more conviction is this chart. This is DXY weekly, and we've been talking about this chart where it peaked right about here, right? Came back in 5, 8, broke that, and all these levels one by one, we've been capturing all these levels, and we were saying that if it breaches right about here, this super trend on the regular candle, then it's going to go down into the super trend here on the Heikanasha candles, and if that breaches, we were looking forward for a push all the way down into the 50, and then now we are saying that if it breaches here, which looks like it will continue to the downside, maybe a bit of a decent hold here, and after that it'll continue to push to the downside. Then I'm expecting it to move all the way down here at a 102.40 to perhaps into 101.70. Excuse me. This is where I think the whole story is going, and very likely I'll be looking for a bounce around 102.30 again, or 101.50 to 60. Then after that bounce, very well, it should come back into the mean on the month, about 99.80, somewhere close to that. That's where I'm sitting with the DXY. So if this downtrend continues, which I'm thinking it should, then this is where the conviction would come from to go markets long. And obviously, the clear trade, the opposite trade of dollar down is gold up, right? So gold should be pretty much very healthy upside into gold. Probably I'm looking at about 2000 for gold, probably even 22 for gold going forward. Right. So that's what is happening with DXY, and DXY is obviously reacting to this. And we've been monitoring this chart pretty closely, and we were looking at the 5 on the month to get tested, and obviously now the 5 is broken. Next up would be 8, 3.30. And yesterday I think I plotted that all the way down here. But so the thesis here very clearly says that if it hits the upper inner Bollinger Band, it's going to hit the mean. If it hits the mean, it's going to hit the lower inner Bollinger Band. I'm still expecting it to hit this 3.40 number. It did not touch that yet. I'm still expecting it to hit that number, probably another bounce off of that. However, if it breaches here, then expecting it to move all the way down here into 3.22, right? And if 3.22, I'm expecting it to hold that 3 point. And this is not a story for today. Perhaps tomorrow, when FOMC comes up with a 50 bips, probably it's going to breach below there, and probably it's going to push down into 3.2, and that will push DXY further down into our target, and that will push risk assets to the upside. And if it breaches below here, 3.2, expect it to come back into 2.9 and perhaps rest around 2.93. This is the way it's going to go. And looking at this data right here, we still have 8 below 21, right? 8 below 21 is still maintained here. It hit the mean or almost hit the mean, and it's unable to clear the mean so far. So perhaps again, I'm expecting a downside furthermore, but I would take again the 10-year seriously again after it clears the 100 moving average right about here, 3.52 to 3.55 range. If it clears there, then again I'll be looking at this as a potential mean reversion candidate, right? and it hasn't tested the mean in a long time. Last time it tested the mean was about here, November 22nd. So the mean reversion is a phenomenon that should occur, and it hasn't tested the mean yet. So at some point in time, if it clears this the 100 moving average on the daily, it will go up and test the mean again. If it clears the mean, very likely it's going to test 3.7 at some point in time. That is not a story for today. To the downside, we still have further more room to the downside, but I'll be cautious. I'll be playing very cautious. Uh, there's a clear general uptrend. There's no denying about that, but I'll be cautious after this 3% move right in the morning. Right. Let's look at oil. Oil, this chart, we've been following this chart since yesterday for this bounce. Was looking for a hit of the 5, then the 8. If that clears right around here, expecting it to bounce up till 73.30. And of course, we'll look at the weekly chart as well. But then take a breather about here. If it pushes all the way into 76.40, we'll take a breather, and then very likely after that breather, 77.80. Oil is again bouncing off of good technical levels, and also this is a reflection on China reopening play. So far, the China reopening is going good, and the thing that you want to be watching is not oil, not China markets, but copper. You want to be watching copper. If copper, copper is in an uptrend, and that's again a China reopening play. But if something happens, or where you see copper kind of starting to push to the downside, that's when you reverse your understanding of how things are working on the commodity side of things, and you reverse your position or get cautious on that position, right? So watch copper. All of these things, if you can watch individually, fair enough. But if you want to watch something cumulative, watch copper. That's what you want to be watching. Right. So next, oil. Obviously, it's hitting the 5, hitting the 8, then it's clears. Expectation is 76.50, and then very likely it should end up somewhere about here, 77.50. The 5 on the week. We'll reassess the situation after it hits right about here. I'll be a little bit more cautious after this 3% move. But general uptrend should be to the upside. MACD is about to cross to the upside, and it's pulled back way down here. I'm expecting it to generally be in an uptrend. SMI is still crossed to the upside, so it should work out. Mean reversion should happen. Not probably not today, but definitely tomorrow after I think Fed lowers the 50 bips. Very likely oil should be in play. All right. What else? VIX. VIX. I think VIX will come back down to this number 1850 or something like that at some point. Probably not a story for today, but VIX collapse was expected, and VIX should be coming back down right about here for a test of 2077. And then, very well, if it breaches there, then very likely it will come back down into 1850 or something thereof. VIX, well, again, let's go back to VIX daily. So VIX right about here. I'm expecting it to break down into 2140, 2130, then very likely into 2060. Not plotting anything for VIX below 1980 as of now. It should hold this line here. If it starts to move to the downside, first test would be 2150, then would be 2060, then expecting it to hold this 1970, 1980 area to the downside, and we'll again look for a bounce around that area for VIX. How much of a bounce? I don't know, because there's no real reason for to get protection other than because of the 3% move today. People might want to protect to the downside, but I don't really see a reason for that. I think the market will be in a general uptrend unless barring anything, any surprises from tomorrow's FOMC. Right. Cool. What next? VIX. Let's go here on the daily, on the 1 hour chart. Wow, look at that VIX collapse, about 13%. Yeah, so there is further more room to the downside. This is indicating that. This is indicating that. But the technical bounce should come about because Williams R is the bottom, and we still have RSI hitting the bottom. The technical bounce, perhaps the bounce would last into 22.6, 22.26, perhaps all the way into 23.47. But not really expecting any explosive moves to the upside from VIX. It should be range bound. All right, let's get into Apple. Apple hitting 150. Very likely it's going to go test this number 150.60, and the mean reversion for the week would be about 150.150 or 150.160. So, but this is my base case to the upside would be a 150.70. If that clears, then the mean is sitting about 150.160. Expecting this to get tested. If all of that clears and the rally goes nuts, expect this number, I'm expecting it from tomorrow, 155.50 area. But if rally goes nuts today, expect it to happen today. There's no saying, there's no technical, way to judge emotions or how institutions would want to place. But 3% move all along was the way to go, right? That was a clear move to the upside. And beyond that, it's anybody's guess. Beyond that, there's a room till 5%. So if SPX have to move 5%, then this guy needs to do a lot of heavy lifting. Perhaps should end up around 150, 150. This should 150, 150, 150, 160 should act as pretty decent resistance. And if it gets shot down from there and back down to, I don't know, 148.90, that'd still be okay, but still not expecting anything below 148.50 area for wherever this 100 line, this brown line, the 100 moving average is situated. I think this will hold for the day. Not looking for Apple to push below this line as of now. But in case it pushes down below the 100 moving average on the week, right now it is sitting about 148.50. Then we'll reassess the situation to the downside. Not really expecting it to happen, but if it does, then we'll reassess to the downside. The first hit should be 150.50 to the upside, and it should 150.150, sort of 150.150, 150.160 should hold to the upside. It should act as resistance to the upside. But if it clears here, then expecting it to hit all the way here, the 50 moving average, 155.25 to the upside. Uh, Maybe this is a story for tomorrow. Beyond the weekly mean should be a story for tomorrow. All right, let's get into Apple here. Yeah, this is still expected. This is still within one standard deviation on the daily. Expected to move all the way up here, and the 200 moving average, which has been acting as pretty decent resistance, even in the last rally, it shot down Apple like just like that. So first up, Apple will come across a pretty decent resistance around 150 to 90, 153 area, and then uh, and this is where the rubber meets the road for Apple, 153.30, 153.50, the 200 moving average, which has been acting as pretty decent resistance all throughout for Apple. So watching that number. To the downside, again, if it starts to come down 148.14, then very likely 146.86, then very likely 146, 145.40, then very likely 144.20. I don't believe this is going to happen, but just in case, if it comes down, this is the path it's going to take all the way till 145.50. It should not, worst case, 145.50 should not move below this, below the 50 on the daily. Apple. Tesla, I still think there's downside risk for Tesla. I still think anything, any move to the upside would be shorted in Tesla. And the whole Twitter saga is going on still with Tesla, and that I think that'll continue. Uh, but by and large, I think now I think after the CPI print, and probably it would be solidified tomorrow after the FOMC comes in, 50 bips, and if the outlook is 25 bips going forward, then Tesla very likely this is the bottom for Tesla. I don't believe it's. Uh, uh, Perhaps it will come back down during the OPEX or something like that. Probably test this number, but not really plotting Tesla below this for the year actually. Barring, of course, barring anything really bad comes out of China situation, or Elon Musk goes nuts and does something really really stupid. Um, those are the two. Those are the only two worst outcomes for Tesla. But not plotting Tesla beyond 163, 164 for. Let's rather put it Tesla right about here, right about here. 157.80. This should be the absolute bottom for Tesla. Absolute bottom for Tesla. And Tesla is one of those companies which is situated, as a market leader in EVs. And going forward, I think EVs are the future. And And then with regard to and if you are a shareholder or whatnot, with regard to Twitter shenanigans, this guy Elon Musk is one of the smartest guys on the planet. So whatever he's doing, right, and people are saying that it's hurting Tesla stock and whatnot. Whatever he's doing on Twitter or with Twitter, um, he has accounted. He has accounted. He has, he has pretty smart people around him, obviously. And this guy has created Category 5 companies, like five of them or six of them. That's not an easy task. That is not an easy task unless you are, unless you are in a VC kind of an environment. You cannot create, Category 5 companies just like, um, uh, you know, uh, just like buying movie tickets. It doesn't happen. But this guy has done it. So he has calculated pretty much all the outcomes, right? Tesla stock going down for whatever reason. He understands that, and he understands where the shareholders sitting with Tesla and whatnot. And he has accounted for that, and he is playing. I think he's playing into his business or Twitter, getting it to profitability, and that's what I think he's doing. And if he has calculated that Tesla stock will move down, perhaps he has done it. He has done it, and probably he figured that this is where the Fed would go down, stop the pace of the rate hikes, and the market will stabilize. And one of the stocks that will stabilize, which is high beta, is Tesla. So I'm pretty sure he has that calculus done for him, and I'm pretty sure I'm if I were a shareholder, I wouldn't really bother much beyond this line. If it breaches there about 158 or something, then I'll probably look for it to get more shares of Tesla for a bounce trade. Right. And let's look at Tesla here on the. Let's look at Apple first on the hour. So Apple is all the way up here, and it has left its five and the second standard deviation. It is out of that's third standard deviation. So very likely it'll let. I think it'll sit around here and will either wait for the technicals to come back up and test the price, which I think is more appropriate given where we are in the cycle, or probably come back down to the second standard deviation 180 148.20. And if the one standard deviation breaks, very well, 147.30. And we will reassess the situation here around 147. If it comes down 147.30, 147.50, the 5 on the hour, we'll reassess the situation there. My understanding is that it will either stay hover around the highs 150.50 to about 149.50 range, and it will let the technicals come back up and probably stay along this line here. And once the technicals are tested, or once the anchor moving average is tested, very likely it'll gonna push up. But per hour, so per the way that and this is where we cannot really figure out what's going to happen with our system, whether it's an emotional trade after this here, right? But uh, per the technicals, what needs to happen is the RSI needs to calm down, and if it comes down, the second standard deviation is sitting at about 148, 10 to 12. And that breaches, the 5 is sitting about 147.40. If that breaches the 200 moving average, and the 8 is sitting about 146.27. I don't believe it's going to breach this 200 moving average on the hour to the downside, or maybe it will come back there and bounce off of it. And the mean is sitting all the way down here, 143.70, which I'm thinking that once the new hour opens up, the mean will push to the upside again. And this blue line is the this is 145.45 is the baseline as of now on the half trend, and it has left the half trend here at 146.50. So ideally, this is how it should play out. Come back into the second standard deviation, and another bounce at second standard deviation. If that fails, the 5. If that fails, the 200 and the 8 here, right? And the market should kind of stall around that 4100 level. I'm not looking at where is, yeah, 4100 level. It should stall around there. And if Apple breaches below the 200 moving average on the hour, which right now is not the projection, but if it does for some reason, and if selling comes in, then we'll reassess the situation and probably push all the way down here into the mean at about till 143.90. All right. Anything else in particular anybody want to see? Probably covering short if you shorted. Okay. Any possibility of a reject 41 natural pullback? Yeah, yeah. I think it will. It will push below that 41.25. But if it clears that 41.25, I think the 41.50 will be tested again. And if it clears the 41.50, very like very likely, I think it will end up being a 5% day, right? And so my understand why am I saying that is because tomorrow is FOMC, and that would be a forward pull forward effect. We might see a pull forward effect on the gains, right? So the expected move was 3% for the day, and then probably that another 2%, which is expected to move tomorrow. If that pull forward effect happens today, then we'll end up probably about with a 5% day today, and probably another 1% day tomorrow. So that would satisfy the week, about 6% move. All right. Yeah, so this is the general uptrend. And 3 minutes to the open. Let's move into live trading.